Hello and welcome to the trade setup. In this video we are looking at Duolingo. It is time for another update, and on the long time frame, for those of you who might be new, we have been tracking two different interpretations. One of them looks still for a direct continuation to the upside, and yet that would be the white scenario where we have only a wave 1 complete, a wave 2 complete, and now we would be within the larger wave 3 where we are tracking a diagonal structure in this interpretation. Well, actually in both interpretations it really would be a diagonal structure, but within the third wave we would have an ABC pattern in development where within the wave C we might have completed the wave 4 in this area, and we could already be in the fifth wave to the upside, and yeah, that would then complete this third wave. Then we also have the yellow interpretation that would assume here we have a wave 1, a wave 2 down, then a third wave up, a fourth wave down, and then this is the fifth wave where we would have a larger wave 1 complete, and we would be looking for a larger retracement within a wave 2 that would very likely reach the area between the $235 level down to the $97 level. Now, as long as we stay above this 78.6% retracement, there is still a high likelihood that we will reverse to the upside and still continue this trend. But it is within a diagonal pattern, so the structure and the setup is not necessarily the highest quality. So keeping that in mind, I am at the moment still tracking direct continuation to the upside in the white scenario, as long as we hold above the 61.8% retracement at the $240 level. And so far so good, because internally within this structure I do have a complete count in the white scenario. I see this as a WXY pattern where within the wave Y we had a clear ABC structure that has enough waves. I am pleased to even consider it as complete, and I could start looking for this fifth wave to the upside, which I am actually already doing. Then in the yellow scenario we have a initially we have an A wave down, a B wave up, and then within the C wave we have a double 1-2-1-2 setup that could be still unfolding, and then we could really find ourselves within a large third wave to the downside that could be very, very strong and take us to quite deep levels in a pretty direct fashion. That is pretty common for third waves to be the most impulsive. Now that is a high risk, especially until or as long as we stay below the 78.6% retracement here at the $343 level. And getting into the shorter time frame here, in the previous video I provided you this support zone where within this structure I would have liked to see an initial 5-wave move to the upside to have a more clear confirmation that this trend is probably going to continue for at least another movement after a retracement within either a wave 2 or within a wave B. Now in this case we actually failed to hold the support, so we only really managed to get an ABC structure within this movement, and personally I would have actually liked to see a couple of 4-5 patterns, but we didn't get any really. So now I would really need to shift this scenario and basically remove that support zone since it's no longer useful. But I could see this as a wave 1, a wave 2 down here, and now we could still be looking for a third wave to the upside, but it would be within a much lower probability interpretation, because we would have really to track a diagonal structure where within the wave 1 we had an ABC pattern, we had our correction here in an ABC of some sorts, doesn't matter the exact component of it, and then to the upside we could be looking here at an ABC structure developing. Now there is, as I was saying, a higher risk, especially as long as we stay below the 78.6% retracement here, that we are really developing a continuation within this wave 2 where this could turn into a WXY, something like this. Doesn't matter the exact structure on this time frame, it is too small of a time frame to really be looking for anything else or for the exact count, and it doesn't matter again. But the ideal target for such a development would be the 100% extension. Now that is at around the $329 level, and as I was mentioning, I will mention a third time, as long as we stay below the 78.6% retracement, there is a high risk of direct fall down in a third wave in yellow to the downside, and we don't have a larger reliable structure for a more reliable trade setup, a high quality trade setup. Now, if we manage to actually build this as a 1, 2, 3, 4th, and the 5th, we could see ourselves with a pretty good opportunity following that as a wave A or as a wave 1, probably an A wave of some sorts. And then we could be looking for a wave B correction that with high likelihood will then result in a larger C wave to the upside. That would be a pretty decent quality trade setup. But for now, I would actually need to be looking ahead and see this third wave develop. And the ideal target for such a wave 3 would be at around the $357 level at the 138.2% extension. Now, as I was mentioning, it is a diagonal structure, so within the third wave, I am looking for an ABC pattern, where I could see this in a few different ways, but mainly I would be looking within the wave C, and let me actually label it firstly. So ABC, and let's use the white interpretation for this. And yeah, within the wave C, I could see here a few series of 1, 2, 1, 2, 1, 2 setups that has developed, and then this could turn into a third wave to the upside. Now let's remove the larger extension and do an initial target, or look for an initial target for this larger wave 3, where I would then be looking for the 138.2% extension, and that would be the target for this third wave. If we fail to build such a structure, it could still develop within a C wave to the upside, but not within an impulse. And technically, it could be fine even if it gets to here to the 123.6% extension. The wave 3 doesn't need to get to this specific target. That is the ideal target. It's just that the likelihood of this being a third wave decreases in that case, and really the only rule for the wave 3 is that it must be an impulse and it must be not be the shortest wave. So technically, if we break the 100% extension, it could still work out, but I would find that a lower probability interpretation in that case if we fail to reach its ideal target. Now, I can't really give you a direct level for looking here in this smaller time frame. I can't give you a very clear direct level of support. I could say that even now we might have a series of 1, 2 setups that has developed, and then this could be a larger third wave to the upside. But an overall target, or sorry, an overall invalidation point, and not even that, would really be if I treat this as a diagonal structure within the wave C, and then I would actually be looking to hold at the very least, this support zone for the interpretation that this could be a third wave up, a fourth wave down, and then a fifth wave to the upside. And if we hold this support zone in the wave 4, I can still track this as the C wave to the upside, but again, the 61.8% retracement must hold. So the $307 level would be a pretty clear indication, a pretty clear signal that we probably will break down into at least a different structure, but with quite a decent likelihood within the third wave in yellow. And for now, these are the levels. This is the trade setup. I hope you enjoyed the video, and if you did, don't forget to subscribe and let me know what else you want me to cover, and I'll do my best to do that in the days and weeks ahead. And until then, I hope you have a nice day, and I hope to see you in the next video. Bye bye.